The Fibonacci Retracement Tool is a technical analysis tool used to identify potential support and resistance levels in the financial market. And Fibonacci is actually someone's name. Well, not his name. His real name was Leonardo Pisano, and he was an Italian mathematician born in the 1170s in Pisa, Italy. Okay, and he's considered one of the greatest. He's one of the greatest mathematicians in the Middle Ages. All right, and he was the one that introduced Fibonacci sequence of 1s and 2s, 3, 5, 8, and the sequence just means like adding the sum of two preceding numbers, like saying 1 plus 1 is equal to 2, 1 plus 2 is equal to 3, 2 plus 3 is equal to 5, 3 plus 5 is equal to 8, and so on and so forth. So in order to use the Fibonacci Retracement Tool, you have to identify the recent high and the recent low in the charts. The recent high and the recent low in the charts. So we have what we call like an impulse move with a correction. We have the impulse move or a swing high and a correction, right? The retracement. So what Fibonacci will help you do is to identify when that retracement has exhausted and it's now time to push further to the upside or push further to the downside. Okay, so we also have the tool like the horizontal line tools that helps you to determine when this move is about to happen. And these horizontal line tools also comes with numbers. That is the sequence. That's what we call the sequence. So we have the 23.6, we have the 38.2, we have the 50, we have the 61.8, which is a golden ratio, and we have the 76.4, or some people use 78.2 or 4, something like that. All right. So in order to so let's just go to the chart. So I'll be showing you how to properly use the Fibonacci Retracement Tool to your advantage. All right, so these are charts, and let me show you how to properly use the Fibonacci Retracement Tool. So as I said earlier, this is a swing move, right? This is a swing move, and you want to see the retracement, and you wait for your confirmation in any of the sequences, in any of the ratios, to take a trade to the upside. All right, so as I said, you have to identify the recent low and the recent high. So this is our recent low. So I will draw this out so you will see it properly. So this is our recent low and this is our recent high. Okay, so I will draw my Fibonacci retracement from here to the top because this is an uptrend. If it is a downtrend, I will draw from the top to the bottom, but this is an uptrend, so I will draw from the bottom to the top, right? So this is my retracement tool, this is my Fibonacci retracement tool. I'll just click on it and I'll place it here, and then I'll drag it to the up side. Okay, so these are my ratios. We have 0.236, we have 0.38, we have 0.5. This 0.5 just means 50, which is half of the move, right? So we have 0.618, we have 0.786. Okay, and then we have 1. This one is just 100, right? And this one is 0. It's starting from 0, 23, 38. So you can see the numbers. So right now I'm waiting for price to get to probably 50 or 61.8 or 78.6 to take a trade entry to know if I'm going to buy or I'm going to sell. Okay, all right. So this is a bar replay tool, this is a replay tool. Okay, so I'm going to play this and then we're waiting for price to get to either 0.5 or 0.61.8 or 0.78.6. okay, all right. So price has gotten to 0.61.8, right? But let me see, because this candle is still going to the downside, but let me just see the next candle. All right. Okay, so when price got to this 0.78.6, I will just put my long position tool here. So this is my long position tool. I'll just click on it and I'll place it here, and my stop loss should be a little bit below this particular 78.6. So I'll be risking 15 pips. Let's say that I'll be risking 15 pips or 12 pips, and then I'll target this particular point. Okay, so I'll wait for price to get to this particular point, and then I'll close out. So this is just like using this Fibonacci retracement to take a trade entry. All right, so in this market right now, if this was a live market, we are already in profit. Okay, so this is my long position. This is a buy market. So now I've placed my buys, and then I'm going to play this thing to see where it goes. All right, you see, so it actually hits our take profit. This one has hit our take profit, right? So what next? Let's see. Let's do more. Wow, okay, I like this move. I love this move. So this is also a swing move to the upside, and now this is also a retracement. So you can also, let me delete this one, because right now you see that this one has already played out. This one has played out already. So I'll just delete this one. Let's do another example, and this, you can see this is a swing move, and this is the recent low, this is the recent high. So I'll just bring this recent high here and bring this recent low. Sorry, I'll bring this recent low to this point, and then I'll just draw my Fibonacci retracement from here to the top. Okay, so you can see that price has already gotten to this 0.618. So I'll just place my long position tool here to buy from here. Let my stop loss be a little bit below this 786. So in case market wants to come back down, need to tap on this particular point, I won't get stopped out. All right, so let's go. Let me play it again and see what happens. All right, you see as price is going to the upside. So what time is this actually? So this is 19:30, which means it's in the evening, and probably we might not be in the trade at this particular time, right? So probably I might just want to close from this point and then just go and rest for the day. But you see, price is still going to the upside regardless. All right, so this is the next morning. All right, so this is just how to just use your Fibonacci retracement tool in any moving market. As long as it has a swing high and a retracement to the downside, you can use it to plot your to determine when price is about to retrace back to the upside, to reverse back to the upside. Okay, so in order to use it, let me just double click this and show you the ratios that I'm using. So here I clicked the 0, I turned on this particular point, the 0, the 23.236, the 382, the 0.5, which is the 50, the 61.8, the 78.6, and so he's saying here 0. But it's 78.6, right? So that if you want to do, you can just customize your own this way as well. All right, so I hope you understand this, and then you can also use this as a confluence, but this should not be used as a standalone principle. This Fibonacci retracement tool should not be used as a standalone principle. You should align it with your trend line. So you can see here, I already drew my trend lines. I took, you should always use it to use other confluences like a trend line, psychological level, and a double top or double bottom formation, depending on the trend, if it's an uptrend or a downtrend. Okay, so you should always use other confluences, candlestick formations, a chart patterns like double top, double bottom, to identify, to also align it with your Fibonacci to know when to buy and when to sell. So you can see here that this was a bullish engulfing candle. This was a bullish engulfing candle, right? That was the reason why I also decided to take this trade. Okay, and also at this other particular point, where did we stop at? So the first one we took was here, right? The first trade we took was at this point where it created a double bottom. You can see that price came to the upside, came back up, dropped again, came to the upside with all as well this bullish tweezer top. This is a tweezer top candlestick. Let me delete this so you can see it properly. So this here is a tweezer top candlestick with another bullish candlestick to confirm that it's a buy. It's for a buy. So I hope you understand that you should always use other confluences, not just the Fibonacci retracement tool alone as a standalone principle. Alright, so I hope you understand, and you can watch the video over again if you find it difficult. Thank you for watching, guys, and I'll catch you in the next video.